Welcome back to this Money Control live stream. You're watching Closing Bell right here on Money Control with me, Nandita Khemka. What a freaky Friday it turned out to be. We broke below crucial support levels. We broke below that 24,100 mark as well, in intraday trade. And, there was a swing low that was made at 24,073 or thereabouts. Intense selling pressure across broader end of the markets as well. It is the worst fall that we have seen in the market, the recent string of losses since COVID times, right? And 8 to 9% correction from all-time highs. That's the kind of correction we have seen. And October, of course, has been a down month for the market. There's been persistent FI sell-off as well, and earnings, have disappointed, to say the least. The muted expectations were there already, but we saw some of these companies missing expectations by a wide margin, and that's something that has stoked the kind of sell-off that we are witnessing in the market. Broad end of the markets were also bleeding. The mid-cap index, shed somewhere around 2% or thereabouts. The small cap index was also down in excess of 2%. As much as 9 lakh crore rupees, was wiped out from market capitalization in today's sell-off itself. But we did end the day off lows. Did see some kind of a pullback from the day's low. So the Nifty ended just about at 24,180, just 20 points shy of that 24,200 mark. So it is an over 100-point recovery from the day's low. But of course, we'll be touching base with our technical expert and asking him as to what really one should be doing, what is the kind of support level one should be watching out for, and the most important part, or the most important question being, is 24,000 facing some kind of threat as well or not? Are we poised to slip below that crucial 24,000 mark as well in the coming sessions? So that's the key question that we will be asking our experts. Of course, the market breadth was quite dismal. At one point, the NSE advanced decline ratio was at 1:11. But towards the end of the session, it kind of stabilized, not really stabilized, got a little better. So finally, the Nifty advanced decline ratio was at 1:7. Nifty Bank, that was the pain point today. This is one sector that has been providing support to the market. At a time when FMCG, autos, all of these sectors had seen quite a bit of drubbing. But today, the Nifty Bank index also succumbed to pressure thanks to IndusInd Bank. The poor earnings stoked a 20% kind of a sell-off on that counter, which is why we saw the Nifty Bank index plunging over 1,100 points at one point in time, but ended the day lower by about 750 points or thereabouts. FMCG was the only sector in the green. And if you look at some of the other sectors that were under pressure, aside of banks, they were autos, metals, realty, intense selling pressure in all of these pockets. For the week, of course, we have seen deep cuts. This is the fourth straight week of losses, the longest weekly losing streak for the market this year. In terms of losers, IndusInd Bank, of course, that was the big laggard, followed by Shriram Finance, Adani Enterprises. BPCL reported numbers in the dying hours of trade. Profit was below estimates. That stock was among the top laggards. M&M, Coal India, these were some of the other losers. Gainers were few and far between. We were struggling to look for gainers in today's market, but ITC held out on the back of good top-line growth in the second quarter, although margin pressure was seen across segments for ITC. Axis Bank was the other one that stood out. Amitabh Chaudhary has got the extension as the MD and CEO, and this is some news that the market cheered. Britannia, HUL, BEL, Sun Pharma, these were some of the other gainers. In terms of broad end of the markets, quite a few losers, but just to pinpoint a few: Poonawalla, FinCorp, Glenmark Life, HPCL, Motilal Oswal, Dixon Tech. We'll be talking about this stock in details. This stock also plunged nearly 10% or thereabouts in today's session. Gainers, Laurus Labs did well today. Thermax, Sundaram Finance, Max Health, and BKG, good numbers, so reacting to that. But let's get on board our guest for today then. Joining me is Ashish Baheti. Ashish, great to have you on the show. Looking at the kind of fall that we have seen in the market in the past few sessions, we've shaved off 8% kind of, levels from all-time highs. Would you call this a falling knife? Is the selling expected to continue as we step into a new week? What are your thoughts, and what are the kind of support levels you'll be watching out for? Where do you think the index will stabilize?
Correction, I'll say that the market is correcting its mistake of the exuberance and overly pricing or not chasing the earnings and giving astronomical valuations to the companies. And if you'll see, it's not been that such a fall from last October. If I'll say, is the first time or probably the second time Nifty has closed below its 20 demo on the weekly charts. So it's not that of a biggest fall yet. Yes, from the highs we are calculating from 26,000 plus levels, the fall looks like of 2,000 point in this month itself, and it's been the one of the worst Octobers since 2008. But I'll say the froth is being taken off from the system, and which is a healthy for the market. I think market is trying to recalibrate itself, and we can see post the earning closures, market rebalancing itself, and again start moving towards its upward journey. So yes, there will be accidents during this earnings seasons. We have seen where the earnings has been weak, market has been like slashing the stock prices. And the thing is, not just one sector. We have seen the slowdown from across all the sectors, be it auto, where we have seen Bajaj Auto giving a bad commentary. FMCG companies have given slowdown signs, and so is the IndusInd Bank. So across, if I'll say holistically, the entire economy is looking a little slow down mode, despite being the quarter where we see little earning pickup and little, second quarter is usually the start of the festive season starts. So yet, if there's a slowdown, so yes, the valuation, market cannot command such a higher valuation. So this looks like a decent correction to me.
All right, decent correction. But what about the broader end of the markets, the mid and small cap indices? They have seen sharp sell off, and it has been the worst week for the Nifty mid and small cap indices since December of 2022. Do you see a deeper correction playing out here?
Yes, that's the one place where the froth was the highest, and yes, the people has been of the opinion that this momentum will gonna continue perpetually. So yes, I expect more correction to be on the mid cap indexes and the small cap indexes. But I think for the Nifty, Nifty will try to make a base around these levels. We have seen most of the private sector banks is still trading near its 20 DMA, except IndusInd Bank. But other than that, the market has been like on the large cap side, there's not much correction. IT is still fairly doing well. But yes, one should be staying cautious for specifically for mid cap, small cap, and PSUs, where the froth was the highest.
All right, point taken. The Nifty Bank Index. Let's talk about the Nifty Bank Index now. Till now, the Nifty Bank Index has been providing support to the market, right? But of course, today the kind of moves we saw on the shares of IndusInd Bank, of course, at a time when HDFC Bank has started doing well, even today we saw the likes of Axis Bank and ICICI Bank doing well in a weak market. Do you think today's slump on the Nifty Bank Index was a one-off, and we could see some bit of rebound from Monday, or do you think 50,000 could be taken out in the coming sessions? What's your thought there? And secondly, we'll talk about IndusInd Bank in just a bit. HDFC Bank, what are your thoughts there? Because the stock, has been a weekly outperformer as well, and it has been doing well ever since it reported numbers.
Yeah. So X of IndusInd Bank, the entire Nifty Bank index was fairly priced, was fairly traded today. It's only the IndusInd Bank which created the most of the dent, and it was almost contributed to minus or negative 240 plus points to Bank Nifty. Whereas we've seen HDFC Bank still comfortably trading above its 20 DMA, and even in today's call, there was not much of the contribution from the HDFC Bank. It was just hardly 0.5% down from today's opening point. So I'll say Bank Nifty, except of IndusInd Bank, there's nothing much to worry. It looks still very resilient and still holding its ground above 20 DMA.
Okay, that's the view. Since we are talking about IndusInd Bank, just want to point out, shares, of course, tanked on the back of a drop in profitability, asset quality deterioration. What the street didn't like was the fact that there was asset quality pressure when it comes to the MFI business, and that has been a phenomenon that has been playing out with other banks as well. We saw Kotak Bank, RBL Bank, all of them, saw pressure in earnings due to their MFI exposure as well. Aside of that, net interest margins for IndusInd Bank were at a 3-year low. Operating profits were down both on a QOQ as well as YOY basis. Return ratios were also under pressure. Return on asset at 1% vis-a-vis 1.7% on a quarter-on-quarter basis. Return on equity also, at 8.1% vis-a-vis 13.5% on a quarter-on-quarter basis. Asset quality worsening is something that we saw play out, and brokerages have also flagged challenges going ahead, and they see risks, downside risks to return on asset and return on equity. Most of the banks have, most of the brokerages, I beg your pardon, have maintained their buy rating, but target prices have been slashed, and even in terms of ROE, ROA, the projections have been lowered. But after today's fall, do you think technically the stock has seen its bottom and provides a good entry point? Would you say that, or would you say steer clear of this counter completely?
It's hard to predict the bottom because to make a bottom, the stock should at least sustain or make an attempt to hold its recent lows. Today was the first day of the fall, and in fact, IndusInd Bank has been a clear underperformer out of the entire private sector banks. The stock has been trading way below its 200 EMA. 200 EMA was placed till yesterday. It was placed at 1460. And yesterday close itself was close to 1270. So it was a clear underperformer. The concerning part is the way the price volume shakeout today happened. Average volume of IndusInd Bank is usually 2 to 5 million shares, and today volume was almost 55 million shares. With such a fall and with such a volume, I think there's more worst can or more worse news can come, or the price action can come in the coming week, because there's a lot of short built up. Even today, we are seeing there's a lot of short build up have happened. So one should wait. I think 1,000 should be a good support level. If IndusInd Bank able to hold the 1,000 level and make some consolidation at this level for at least 2 to 3 trading session, then probably we may call that this is the bottom in the making.
All right, we may call it a bottom in the making, but let's shift focus to FMCG that hasn't really been doing all that well. Slowdown in urban demand has been a trend that has played out, and in earnings, and we have seen stocks like HUL, Nestle, all of them reacting to it as well. But ITC, bucked the trend in terms of second quarter performance. Although margin pressure was seen across segments, top line growth was fairly impressive. And there's been a rebound in the agri business that had been a pain point for the company for quite some time, so that has been a pleasant surprise as well. Cigarette revenues also came in at 3%, which was at the higher end of the expectations. So stock, of course, reacting to that. And if you look at what the brokerages have to say, they have maintained target prices above 550 levels. But on the charts, do you see chances of a fresh up move from here? Because FMCG as the entire basket has not been doing all that well ever since earnings started trickling in.
Is almost close to its 200 EMA, which is placed at 57 or 50, I'll say 58,000 mark. And today's close of Nifty FMCG index was close to 59,000. So I think yes, Nifty FMCG index may find its bottom or may find its support near its 200 EMA. X of ITC, which is pure, not just a FMCG play, but I'll say it's a conglomerate of cigarette, paper, FMCG, and even other ancillary businesses. So I think it's a best pick at this falling market. One can go long here in ITC as a portfolio pick by keeping a stop loss of 470. I think in coming days we might see ITC again bouncing above its 20 EMA, which is like 500 zone. So one can go long here. Other than ITC, from the FMCG pack, we are still not very bullish on other stocks.
All right, not very bullish on other FMCG stocks, but ITC is well poised on the charts. Let's talk about Dixon Tech then. Although numbers were good, we saw a 7 to 8% kind of a downtick coming in. And this, despite the fact that the company has raised its FY25 revenue guidance to 40,000 crore rupees, which is 25% to 33% higher than the earlier guidance. But I think some bit of a dampener with respect to management commentary. They've said that they may see a dip in volumes post Diwali. However, volumes are expected to once again pick up in the fourth quarter. Mobile segment margins are expected to improve to 4.5% in the next 12 to 18 months. Aside of that, of course, there was a lot of positions. I think already the kind of pre-positioning that was there ahead of earnings could have led to unwinding of that. But on the charts, would you say that the stock has, of course, doubled? If you look at the 1 year performance, would you say that this correction is a good entry point, or is there a certain reversal of trend that you are spotting on the charts?
Yeah. The stock almost from last April it tripled from where it was trading around at in fact last October itself it was trading at almost 5,000 plus levels, and now today's open was almost 15,000 plus level. So whereas the sale has just increased almost 1.8 times, so we have seen astronomical momentum in Dixon Tech, and stock was too stretched. I think there's a mean reversion right now. One should not chase or try to catch the falling knife here. This is the first day of the fall. I think there is more correction ahead because the 200 MA itself is placed at 10,000 level. Stock is still at 13,000 or 14,000 level, close to that, near to 14,000 level. So there's still 4,000 rupees gap between its 200 MA and the current prices. So we may see some more correction here. But yes, it's a good portfolio stock, but the more accumulation or good accumulation point would be near to 12,500.
All right, that's the view on Dixon Tech. But a couple of consumption, plays that I want to talk about is Radico Khaitan. Although we're speaking about urban demand slowing down, but when it comes to premiumization trend, that seems to remain intact, right? Because Radico Khaitan saw good numbers, operational performance has been strong, gross margins also improved over 250 basis points on a quarter-on-quarter basis. The company actually reported a 13% jump in its prestige and above category. EBITDA margins also saw an improvement, although the stock, gave up all of its gains intraday. Would you really look at the stock? It's still some time away to retest its 52-week highs or thereabouts. But looking at the last 6 months, the stock has done fairly okay, 31%, fairly well, I would say. But here on, what is the trajectory looking like? Can it make a dash at that 52-week high of 2,500 or thereabouts again? Or would you say that the stock has kind of achieved its heights for the time being?
See, the chart is looking very good. Even in the falling market, we have seen Radico has been continuously making higher highs pattern. And I think once the market stabilizes, we may see another upside momentum in this particular space and this particular company itself. So anybody who's holding long, one should remain long by keeping a stop loss, or trail the stop loss to 2170, almost 100 points from here. I think the chart, the way it is looking, if just the market reverses, this will be the first stock to move or continue its upward trajectory. So we are bullish on this.
Okay, bullish on Radico Khaitan, but two stocks at one go. BKG reported numbers, and this stock was among the top gainers on the Nifty 500 index, and the other one is Laurus Labs. What do you do with these two stocks now?
Yeah. So for BKG, I think it's been a one-way rally since the IPO, which came around at 300 level. Honestly, I'll be a little cautious at these levels, and if anybody is holding long, one can book some profit, because even in the today's trade, we saw the stock making high till 915, and from there was some profit taking. So it will be a good point to book some profits here. When it comes to Laurus Lab, I think post the numbers reaction has been good, and market stock reversed from its lows of today. One can continue remaining bull because the stock has been consolidating from almost April. From April till now, the stock has been moving in a tight range of 400, and I'll say on the upper side 490, and the lower side has been 435. Stock has been continuously consolidating here. And whereas we have seen the same, this Divi's Lab has performed very well and made fresh highs. So one can remain long here by keeping a stop loss of 435.
Okay, that's the view. But with that, before I let you go, Ashish, anything that you would be recommending in this market for the next week, and any stocks for Mahudar trading? Any picks there?
So I'll be a little cautious in coming week also. I'll wait for some time, probably till Monday and Tuesday in the market to consolidate at the lower level first. But on the stock side, I think there's a good trading idea or the good momentum we are seeing in Pidilite Industries. Even despite in the today's falling market, the stock was able to continue or maintain its gain, whatever it made in the first half an hour or 1 hour of the trade. And stock closed almost near to its 20 DEMA. So one can go long here by keeping a stop loss of 3130. We are seeing on the upward trajectory of 3300 in this stock.
Okay, Pidilite, that's one pick. Any Mahura trading picks?
On the Murat trading pick, I think Reliance would be our preferred pick at these levels. The way it has corrected from 3200, and I think by Diwali, it should make its base somewhere around 2650 to 2600 zone. It will be a good point to re-enter because almost 200 MI is placed at 2900. So it's been a massive correction from there, and it's almost available at from 200 MI itself. It's corrected. It's available at 250 points lower. So it will be a good value pick for Morat. Yeah.
One last question. Just listening to some of the experts, speak on the market correction, and some of them were of the view that Nifty could correct to as low as reaching its 200 DMA, which is still some time away from here, right? I think, if I'm not mistaken, 6 to 700 points away from where we are at right now. Do you see a chance of that happening?
Yes, certainly. I mean, if we may see another or a couple of more earning misses, Nifty may travel till that point, that is 23,400 zone. But I'll see it's unlikely that Nifty will move that till that level, because it's been 4 continuously weeks we are basically making lower lows. I think Nifty might consolidate at this zone of 24,000 and may start their upward trajectory from probably by end of the next week.
All right, that's the view then. We'll be watching out for those levels with bated breath. But for now, would like to thank you, Ashish, for taking our time and joining in this afternoon and helping us understand which way we are headed from here after the kind of correction that we've seen in the market. Wish you a very happy Diwali and a prosperous new year, and look forward to interacting again with you sometime soon.
Sure.
Thank you. Well, on that note, we've come to the end of this edition of Closing Bell. Of course, it was a freaky Friday for the market. We did see, quite a bit of, weight shed from the index, but we did end off the day's low as well. 24,200, we weren't really able to defend that level, but just shy of that crucial mark. Let's see how really things pan out next week. Of course, festivities are in the air. Let's see whether or not there could be some buying emerging at lower levels. But for now, it's a goodbye from me and the entire team that put the show together. Thanks a lot for watching. Have a great weekend and come back and join us on Monday morning with the markets. Thanks a lot.